Good afternoon, everyone, and thank you so much for joining us today. This is Cary Levenson. I know you're not accustomed to hearing my voice, but my son Bill is out of town at a meeting today, so I guess I get the privilege of introducing our SBLI special guest who will discuss their new final expense product. So with that said, I want to thank you all so much for joining us, and let's get going here. So I want to start on the first screen. I'm just going to touch a few of the highlights of the new product. Just want to say that the issue ages are 50 to 85 on the new final expense product, which we are extremely excited to bring to you. Commission annualization is available upon approval. Full death benefit amount will be paid out from day one. Instant decision with no medical exam. Very, very exciting. Extremely liberal underwriting. And this policy is guaranteed non-cancelable as long as the premiums are paid. So we are very, very excited to bring this to our agents in the field. This is something that we feel will be an excellent addition to your portfolio, especially with several of the final expense products being withdrawn at this point. So the timing on this is absolutely perfect. Okay, Andrew, let's go to the next slide, please. Okay. Hey, who's that good-looking guy up there? Let me tell everybody a little bit about Cary's Corner, and then I actually want to take a few minutes and read you a Cary's Corner from actually a year ago that I think we'll all be able to relate to. So what I do is I put out an article every 4 to 6 weeks. It has nothing to do with technology, nothing to do with participation rates, technology, anything like that. I give you a perspective after being in this business over 50 years from things that I have seen in the past and things that I am seeing right now, and sometimes things that I think I might see in the future. So what I want to do again is take a few minutes. You can see all of the Cary's Corner if you go to the to our website and check out the Cary's Corners. But this was a personal situation that occurred in my family about a year ago. So I do want to share this with you, and then we'll move on. With over a century and a half of working with life insurance agents, I feel pretty confident that I've seen and heard most stories, whether they're happy, sad, or indifferent. Through the years, as I've listened to you, I've laughed and I've cried, but I can honestly say I have always done my very best to help our agents, help their prospects and their clients. However, I decided to share a very personal story with you that impacted my own life 3 weeks ago. The underlying theme here emphasizes what I learned 51 years ago, but it never hit home like it did in mid-June of this year. The personal nature of what we do is what makes good advisors great, and having awareness of the unpredictability of life. And very unfortunately, as I share this story with all of you, we all need to realize that nothing wakes people up about the need for financial planning like truthful, personal accounts of misfortune, medical tragedy, accidents, pain, and untimely death. A very close personal family member of mine is in her mid-60s, in excellent health, been married for 40 plus years, has absolutely no illnesses, takes no medication whatsoever, and is a fantastic wife, mom, and grandmother. She lives in New Jersey, with her entire family and all the children. She and her husband decided to take a cruise 3 weeks ago just to celebrate the wonderful life they share together. In the northeastern part of the country, the major cruise ships stop at most of the major ports in Canada. So that's what she and her husband decided to do, just to spend some special time together. So while on the ship on a Wednesday evening, they had dinner, saw a fantastic show on board, and then headed to the casino and prayed the blackjack table would be a little kinder than several previous nights. And ironically, it was, until she stood up and then fell back down on the floor. As I understand it from other family members of mine, she blacked out and suffered a major stroke, paralyzing the entire left side of her body. A helicopter landed on the cruise ship and took her to a hospital in Canada, where she and her husband stayed for 1 week, and then 10 days ago, she was transported to a rehabilitative facility in New Jersey, where she is today. She still cannot speak. She cannot see out of her left eye. She can't move a finger or toe on the left side of her body and is confined to a wheelchair, probably forever. So what is the point of me sharing this nightmare with you and reliving the terrible pain for me? As life insurance advisors, we are constantly marketing and prospecting, looking for new clients. We use social media and all forms of technology, including Insure Me Now Direct and Sell While You Sleep, looking for new prospects to tell our story to. This is wonderful and separates the successful agents from the struggling ones. But truthfully, have you recently spoken to your friends and family members about their financial future? Have you thought about a close friend, brother, or sister, or parent suffering a stroke on a cruise ship? Don't you think a family member would be interested in living benefit riders, which include chronic, critical, and terminal illness benefits? I feel it's our obligation to discuss these fantastic options with our family as well as strangers we might meet while prospecting for new sales. Why wouldn't your family member, as well as a client, be interested in accelerating a large portion of their death benefit to pay for medical expenses such as long-term care? I can tell you right now, I'm very aware of several people in my own family who would love to have these riders. So continue to do what no one else does when others need you the most. But all I ask is don't forget the ones you love the most, your family. They deserve your advice, your guidance, and your counseling, certainly as much as anyone else. Thank you all so much, and thank you for your prayers. So, absolutely true. That happened to my sister a year ago. I wrote it about 2 or 3 weeks after it happened. And again, you can read any Cary's Corner that I write on our website in the Cary's Corner section. Okay, Andrew, can we move on, please? Okay, the next slide basically are just a few testimonials that we received from other from agents across the country. I'd like to just spend a minute and read Terry Hare's, which I think is really, really important. Just a shout out to Andrew Paris and the whole team at Levenson and Associates, starting a mail campaign for mortgage protection leads with them and got probably 15 leads the first 2 weeks. One in particular I worked with, a young professional couple that had just gotten married within the last 15 months, bought a home and found out they were expecting. Lots on their plate immediately. We were able to do 500,000 30-year terms on both of them for mortgage protection. These will more than pay for the lead campaign. Haven't met this couple face to face yet, but in building rapport over the phone, taking time to educate them on questions they had in general, we are going to have a face to face. The husband said, "We have been looking for a financial advisor, but we have not met one that we felt we could trust. We interviewed 5 and just did not feel comfortable. They want a comprehensive financial analysis and probably move their dormant 401k plans from previous employers. Nothing huge, but a great opportunity to help a young couple get started off on the right path from the beginning. They may well turn out to be some of my best clients 20 years down the road." All from a mail piece that we sent them regarding mortgage protection. Thanks to Andrew and all of the pros at Levenson, Terry Hare. So again, our lead programs do work, okay? And once again, we really, really appreciate this kind of feedback from each and every one of you. So thank you so much for that. Those comments are great. Andrew? Okay. I'm sure many of you have seen this publication. It's the Levenson Life and Annuity Leader. We send this out on alternating Tuesdays. So basically, it's a compilation of the latest news, updates of what's going on with life insurance companies, annuity companies, and what's going on at Levenson and Associates. It's very, very informative. And the next time we send one out, a week from, or actually 2 weeks from this past Tuesday, try to go through it and see what you can get out of it that'll help your practice. Okay, Andrew. All right, we have 2 new incentives going on right now as we speak. The first one is the 5 for $500. Very simply, from July 22nd through September 30th. If you write 5 apps on Insure Me Now Direct, either Gerber, Manhattan Life, Surety, Banner, and we have 2 new carriers coming on very shortly. We will say, after the case is placed and they're in force for 30 days, we will send you a check for $500. Not too complicated. Second incentive is concerning Banner. We call it the Banner Life Banner Bucks contest. And again, 2 incentives going on within this category here. With your first Banner app, no minimum premium, we'll give you a $100 check as a bonus. And then the first Banner bonus written through Insure Me Now Direct, first Banner app written, we will give you a $150 bonus. Okay, so feel free to take advantage of those as well. Okay, Andrew. Okay, let's take a peek here. These are basically some of our final expense highlights in our final expense platform. And like I say, we are extremely excited to bring you SBLI, where several of these highlights are basically being withdrawn by several carriers. But in any event, this is basically the categories that we have right now. But like I say, with the introduction of SBLI, which you'll hear about in just a few minutes, I think this is going to really improve. In fact, I know it will. Okay, Andrew, let's move on. All right, excellent. I want to just take a minute and thank everyone for taking the time out of their day to spend with us. We greatly appreciate it. We greatly appreciate our relationship and our partnership and our business that we do together. And with that said, I am very delighted to introduce John Spinner from SBLI.
I appreciate it, everybody. And Cary, thank you for having me on the call. Extend my thanks to Bill as well. Very excited about the partnership. Levenson Associates is a longtime partner of SBLI, on the traditional business side of things, and I'm excited that they are additionally adding the final expense line. Um, I'm just going to go over kind of some brief history on SBLI, and then just talk about the product at a high level as far as where it fits and the position in your portfolio that it's going to occupy. So for those who are not familiar with SBLI, SBLI is a 100-plus-year-old mutual company with an A rating. Obviously, not a lot of those in the final expense space. They were actually founded by a Supreme Court justice back in the 1800s. And, of course, being a mutual, as is true for all mutuals, really client-centric, client-focused. And then additionally, they are agent-centric and focused as well. And I think you'll be very happy with the overall level of customer service as well. So I'd like to talk just kind of about general features, some of the value-added riders that are in place, application process, billing information, and, of course, lastly, commissions, because I'm sure everybody wants to know how they get paid and when they get paid as well. So we'll just go over everything at a high level, going over with the general features first. This is a 50 to 85-year-old product, so it will only be for 50 to 85. There are no exceptions. Minimum face amount 2,500. Maximum face amount is 35,000, with some caveats based on eligibility via plan level and age. So it is a three-tiered plan. There is a two-level plans. There's a preferred plan, and then there's a standard plan. Starting with the preferred, which is obviously going to be the best class that somebody could qualify for. That is going to be the 35K max coverage for ages 50 to 75. 76 to 85. That face amount is going to reduce to 25,000 on the preferred tier. On the standard tier, which is also level first day coverage benefit at a higher premium, it's designed to take some of the adverse health conditions that are out there, but health conditions not so severe that they need to go to a guaranteed issue or go to return a premium. Give you an example of some of those conditions too. Before I get into those face amounts, those be conditions like lupus, Parkinson's disease, MS, sickle cell, hepatitis, pancreatitis, chronic kidney disease, and then COPD and emphysema. So again, kind of more adverse health conditions, but still able to get first aid coverage. However, there is a reduction in face amount. It's 25K max for ages 50 to 75, 76 and above. It's a 20,000 max. Return of premium or modified death benefit, depending on how you usually refer to it as. Obviously, those are your very critical health conditions, just short of guaranteed issue, and takes fairly adverse risk in that bracket, but it is a ROP plus 5% year one, ROP plus 10% year two, and then full death benefit year three for any death via natural causes. If it's a death via accident, of course, it's 100% of the death benefit up front. So those are kind of the tiers. Also, the max face amounts associated with those. I do want to say, within those tiers too, and we'll dive into underwriting, more specific underwriting questions, I'm sure, down at the end of this call. But just as a general rule of thumb, really where the product stands out from an underwriting standpoint and where it really fits with those three tiers are really the preferred and standard classes. First and foremost, of course, it sticks out because it is 100% instant decision. There are no RTUs. You're not going to have to wait 2 to 4 days for to have an underwriter actually look at the case and approve it or approve it other than applied for. You're going to know before you either leave the house or before you hang up the call or end the Zoom with a client, not only whether or not it's approved, but what level it's approved for. So if there is a decision other than applied for, you can address it right there on the spot and either go down to a lower tier on the product or, of course, pivot to another product, maybe even GI at that time. So it's really nice to know before you go. And then additionally, just from an overall where it fits standpoint in those tiers. I do see SBLI, and we'll dive more, into the competitiveness of it from a premium standpoint, particularly, combined with the value added riders that are in place. But just from an underwriting standpoint and where it fits in your portfolio tier wise, really about 90% of your business you can get through first day coverage with SBLI. It's a very high first day approval rate between preferred and standard. So there's really 90% of your business that you can get first day coverage on. And first day coverage always wins in final expense, not only in getting the sale, but additionally keeping it on the books afterwards. So the fact that you can get such a high percentage through with first day coverage, I think is, really where the niche fits. Preferred and standard are, as we'll dive into a little later, very competitive premium wise as well. The ROP is less competitive, and I would, and again, I'll talk more in detail later on where it truly fits and where it doesn't. But I see this as a good all around lead carrier, to kind of be one of your go-to first carriers to try to get somebody approved, due to the competitiveness and the incredibly high first day coverage rate combined with an instant decision. Additionally, there are 2 no-cost riders included, which when we talk about product competitiveness from a premium standpoint, I feel when you add these riders in, considering there is no additional cost for them, I think it becomes one of the best overall values in the final expense space. The first rider is what's known as the Sequoia Funeral Concierge rider. Sequoia is backed by Nazer Global, and it is administered by Nazer Global. Nazer is the largest provider of funeral goods and services in the world. They're in a couple dozen countries, mostly throughout the Americas. And they also have over 3,000 network funeral homes here in the States. So just massive, very large, truly global company. And they have a strong U.S. presence as well. The call center is located right next to Levenson Associates, right in South Florida. So very local. I'm sure Cary and Bill could probably take a drive over there to check it out sometime as well. But it's a very unique plan. For those of you who've come from a Lincoln Heritage background or a Senior Life background, it's going to be in similar vein to the FCGS or the Legacy Assurance, as far as from a marketing standpoint, and also a persistency tool standpoint. I think it's a better overall service by far. And then additionally, there's no extra cost. It's not a separate thing that you are charging for that's independent of the insurance policy. If their insurance policy lapses, the concierge certificate lapses with it, and they no longer have access to it. But for a beneficiary who does call in at time of claim, it is a true available 24/7. That call center does run 24/7. It's a true step-by-step guidance and planning and planning a funeral service and also negotiating a funeral service. So it is a very much, when we call it a concierge service, it is a white glove service. They're going to handle the entire funeral process, or work hand in hand with a beneficiary to plan the entire funeral process, including negotiating the funeral if you are going to a funeral home outside of their network. And if you're going to a funeral home inside their network, you're getting a deep discount right out of the gate by having this. The average consumer is going to save 20 to 40% on a funeral or cremation by having the Sequoia team negotiate on their behalf or give them a steep discount at a member funeral home. So very perceived high value rider included in the base premium cost. Additionally, there is the Legacy Shield rider. Admittedly, this one's not nearly as exciting as the Sequoia Funeral Concierge, but Legacy Shield is it's an online service that the policyholder can use. Effectively, they will have access to upload, store, and retrieve any legal documents, insurance policies, passwords, last wishes, any sort of digital keepsakes. It's a one spot repository to kind of stick everything that's important. So when the ultimate day does come, the executor of the will is trying to figure everything out instead of looking through safes, and searching searching on laptops and cell phones and any other electronic devices to try to find important stuff, it's all one spot to look. Again, not nearly as attractive as the actual funeral concierge, but again, no cost value add, which I think is important. And that's when we can talk about, you know, you kind of see some of the benefits product wise, including the high placement on where it truly fits from a competitiveness standpoint and where you should use it and where you shouldn't use it. I think premium wise, on the preferred tier, the very best tier, it's competitive across all carriers. Um, you're going to see it right in line with everybody you're used to, and some of the recent exits from the market, most notably to compare it to, since I'm sure a lot of you were on the call because of the recent departure of the other SBLI that has no affiliation with this SBLI, but SUSA, Prosperity, whatever you may know the company as. Prior, this product is cheaper in almost every cell than Prosperity was. So you're going to find it very competitive in all cases. I would say it's around 10% more than Omaha Living Promise in most bands, with some bands being ultra competitive head to head with Omaha, but even being slightly more expensive in some cases than the Living Promise product. I think combined with the value added riders, it's every bit as strong of a value proposition in the preferred class. Additionally, the standard class is ultra competitive compared to a Liberty Bankers or a Foresters. Where the product probably doesn't fit as well is really in the ROP class. Like obviously, SBLI is more than happy to have that business, but it's not going to be neck and neck with the top carriers on the return to premium side of things, the modified side of things. It's not far off either, and it may still be worth it being with the value added riders added in, but it's not as competitive in the modified tier. So you might want to look for other carriers in that and really use this as your first tier preferred and standard. Additionally, when it comes to smokers, I would say never ever write this product for a smoker. It is not competitive in any way, shape, or form. So I would tend to stay away from, unless it's a smoker with COPD. And you're looking to write the standard benefit, I would stay away from smokers with this product. It's not going to be competitive premium wise. But in that preferred and standard non-smoker tier, it is ultra competitive with everybody. And again, I think one of the strongest value propositions out there to the end consumer ultimately. Um, Application process, I know, is always a big one for everybody. Ease of business is a huge part of why you would want to sell any product. I do believe SBLI does a very good job. First and foremost, it is a 100% e-app driven product. It's the only application process you can use. There is no paper app, and it is 100% instant decision on the e-app. You will get the offer for your client at point of sale. It's designed to be both field friendly and remote sales friendly. Most notably, there, on the field side, of course, you have normal signature options like you will be able to sign on any device, whether it is cell phone, laptop, iPad, etc. You will be able to sign on multiple devices when you are face to face. Additionally, there's a text to sign, an email to sign, and then there's a third-party voice signature as well. Now, that third-party voice signature currently is an actual physical line with a live operator. That is getting changed to an automated line. Of course, when you have a live operator answering, there can be hold times. So it will be going to just an automated line that records the voice verification, reads the disclosures and records the voice verification for your particular case. So that will be integrated in the next few weeks, and we expect that to really be popular as a whole. So several processes, and is friendly to both in person, and then any sort of remote sale is easily enabled between the three remote signature options: text to sign, email to sign, and then third party voice verification. So I think the last piece I'd like to cover before we open up to questions is probably one that everybody wants to know. Oh, actually, I'm sorry. I should probably additionally talk about premium billing. It is also an important one. It is EFT only. Um, I know for those of you who've uh, have been familiar with the product for longer than others. It did initially launch with Direct Express cards being taken. Those are no longer accepted by the carrier. For all of the final expense producers out there, as you know, obviously it's not the highest quality of business. So that is no longer taken. No credit cards are. In fact, it is EFT only. It is true Social Security billing on the draft dates. If you pick Social Security option, that means the first of the month, the third of the month, or the second, third, or fourth Wednesdays. In all those cases, if they fall on a weekend or a holiday, then it would bill the business day prior to line up with when Social Security deposits would come in. There is a quirk with this. If you do want to do a future draft date, it can only be one of the Social Security draft dates, the first of the month, the third of the month, or the second, third, or fourth Wednesdays. They are hoping to add as an enhancement to be able to future draft any day 1 through 28. But as it stands now, if you want to do a future draft, it has to be the first of the month, the third of the month, or the second, third, or fourth Wednesday. That can be changed after the policy goes in force. If you wanted to do a future draft, you could then go change it afterwards by calling into the company. You can change it to be a 1st or 28th draft at that point. But initially, if it's going to be that first future draft, it has to be one of those dates. If you want to right out of the gate have it set up for a day other than those days, you would have to do an instant premium, do a premium at application time, and then it would bill. You'd be able to bill ongoing on one of those dates. But that initial future draft date has to be done on the first of the month, the third of the month, or the second, third, or fourth Wednesday of the month. It'll be an enhancement again, hopefully down the road that happens, but not there at this time. Additionally, important things that are not currently there too. One question that I'm sure will come up that I'll answer now. ITIN numbers. As it stands now, you have to have a Social Security number to get the policy. As an enhancement, ITIN numbers hopefully will be added down the road sometime, over the next year. When that does occur, I would expect it to kind of function like this because there's not always available data for people with ITIN numbers as far as medical history. ITIN numbers, when the time comes when they are accepted, my apologies, when the time comes that they are accepted, it will be a case where if no medical data comes back on the third party verification, you will not be able to proceed with the application. It would only be ITIN numbers that have real medical data that comes back when the third party verifications are done. So that kind of details really all the important points there. Last thing would be commissions. It is a 9-month advance on commission. Paid on issue, not on draft, which I know is one that's important to probably everybody on the line. You do not have to wait for the policy to draft. You are going to be paid during the regular commission cycle as soon as that policy issues. So it is a weekly pay. Pay cycles Friday to Friday. Anything that is issued medically, again, not drafted, but issues medically before 6 p.m. on a Friday is considered part of that week's business cycle. You will get a statement sometime on Saturday that you can see in the back office. And depending on your bank, you should get a deposit Monday or Tuesday into your bank account. So anything that issues Friday to Friday will go into that. That is pretty. I wish I had an actual time for you on the Saturday, but at some point every Saturday you'll have your commission statement available. So I think that's pretty much it from a high level kind of product standpoint. Cary, if you would, or Andrew, if you'd want to open it up to questions at this time, I'm happy to answer anything that's out there.
Yes, we do have a few questions. I appreciate that. I'm going to read them off to you. James is asking, what is the chargeback provisions on the various products?
Okay, that's actually a great question because there is a little bit of a difference here versus other products. During the first 3 months, if something lapses, you're going to have a full charge back on the advance commission. After the third month, it's just a prorated charge back. Much like any other carrier. After 9 months, no charge back based on lapse. If there's a death claim in year one, it will be a full charge back. And then a denied death claim on a contestable claim in the first 2 years would be a chargeback as well. So in line with most carriers after the 3 months, but that first 3 months, would be a full chargeback. And the most experienced people out there know that if it's going to lapse, it's going to happen usually in the first 2 months anyways. So, not a huge deal on that first 3 month chargeback because if it makes past the first two, you're in good shape anyways. But that is a provision. It doesn't go prorated until after 3 months in force.
Excellent. Thank you. All right. Next question is from Martelli. He's asking, let's talk about what we haven't really dived into it as far as underwriting. He's asking specifically about cancer patients. What are the look back periods on cancer? But most notably, if I can expand the question, what are the most notable niches as far as condition related niches? You mentioned COPD earlier. Like, what are the go-to niches that SBLI stands out, and how do they view cancer?
Yeah, so I mean, go-to niches, it's going to be similar to most carriers as far as on look-back periods. So cancer specifically, it's going to be 36 months in remission. Of course, it doesn't apply to basal cell, squamous cell, carcinoma in situ, stage A prostate, all the ones that aren't, are kind of pre-cancer. Of course, doesn't apply to, but for invasive cancer, it is a 3 month look back to get a preferred benefit. And in order to get a modified benefit, it cannot be current cancer. So, that's kind of the first, but full 3 years, 36 months in remission from cancer before you can qualify for first aid coverage. As far as declinations, you're going to really be the standards confined to a nursing home, assisted living center, etc. AIDS related complex, medical testing not done, that's been recommended and not done, dementia, Alzheimer's disease, ALS, and then obviously in the actual cancer, cancer portion is in any. I said actually you have to be in remission for 36 years. On the ROP side, it's a 6 month look back to get ROP. If you've had any cancer treatments in the last 6 months, then you'd be declined over 6 months to 36 months ROP. 36 months is going to be eligible for first aid coverage. One thing that I'll say that's on the application is going to seem weird because the product was being built during COVID. There is some COVID questions that appear like they would be knockouts. They are not actually knockouts, except for if you have been hospitalized for COVID-19 in the last 90 days. That is a knockout. The other COVID questions are not knockouts. They just didn't want to refile an application. As far as niches, I mean, not really any niches on the cardiac ischemic side of things. You're going to have a 24-month look back on any of the various heart conditions, heart attack, stroke, coronary artery disease, angina, aneurysms, cardiomyopathy, heart circulatory surgery. Those are all 24 months. You're going to find, I guess, very friendly though, as far as maintenance medications don't count. If you're, on antiplatelets or blood thinners, you are going to be okay still getting first aid coverage. It's not considered treatment. So it's really the onset of when the occurrence of those conditions happened. Those maintenance medications are friendly in that respect. Niches would just really be the standard benefit. You're not going to a graded for those more chronic type conditions. So I can actually read them off, in order. You have bipolar, schizophrenia, eligible for first aid coverage under the standard. Additionally, you have systemic lupus, Parkinson's disease, MS, sickle cell, hepatitis, chronic pancreatitis, chronic kidney disease. Chronic kidney disease is an important one. A lot of carriers don't take that first aid coverage, with the one caveat: if there is dialysis, dialysis is a decline. But COPD, of course, and emphysema, which we mentioned prior as well. Those are the real big niches on the standard, that, again, first aid coverage, pay a slightly higher premium, but you can get first aid coverage on the product.
Great. Thank you. Very thorough. That's what we needed. We have one more question here, and then we'll wrap it up. Kelvin is asking, do you allow different payers? So, like, do you allow the owner or the payer to be different than the insured? How does that work?
Yeah, that is allowed on the application.
Great. Excellent. Okay. I think that is all of our questions for today. So again, Cary, myself, and the rest of the Levenson team want to thank you, John, for being on today and sharing this great information. This is going to be a core carrier for all of us moving forward, so we're super excited.
Much appreciate everybody. Thank you for having me, and best of luck out there, everybody.
Excellent. Okay. So everybody, I just have one quick ending slide here, and then we'll wrap up today's call. So if you can look on the screen in front of you here, this is how to get started with SBLI. You'll log into our website, go to our contracting area, and you can select the pre-appointment or transfer. If you're with SBLI today, you can transfer to Levenson. We will match or beat your commission level and offer you our cash or leads for contracting incentive. Okay, we always run that, so it's never a better time. Also on the right-hand